Whether we can begin?
Okay. Hi. Good evening. Welcome all. I take pleasure in inviting Mr. Uday Kotak, Managing Director and CEO of Kotak Mahindra Bank, who's also the President of the Confederation of Indian Industry, the largest industry chamber in the country, for this E Adda that Indian Express hosts. Welcome, Mr. Kotak. Thank you so much for joining us. Mr. Kotak doesn't really much introduction to the audience, but there are a couple of nuggets which I learned over a period of time about Mr. Kotak. One is, of course, in his youth days, I believe younger days, he was a very, very prodigious cricketer. And then one day, I think he got hit on a bouncer, and then he was taken to an emergency in Bombay. Of course, post that, I think, probably, cricket lost a Sunny Gavaskar, but then, banking got, the financial sector got, Uday Kotak. So, and he has, in every business that Mr. Kotak has been, starting with bill discounting to hire purchase to insurance to stock broking to car finance to NBFCs, and then finally he became Kotak Mahindra Finance became the first company in corporate history to get a banking license. That was way back in 2003. He was the Ernst & Young Entrepreneur of the Year in 2014. And today, I think he is in such a vantage position as the CEO of the bank, which is the banking being the backbone of the Indian economy, and also as president of the largest industry chamber. He's in a very vantage position to talk about the economy and what's happening in the corporate sector. Welcome once again, Mr. Kotak.
Thank you, Vaidi. Thank you, Anant. Really delighted to be here on the Express Adda. I've heard so much about the Adda and how much following the Adda has created over time.
Yeah, and you're no stranger. You have been on the Adda stage before, and in various formats, and even in the audience. So you're a friend of the Addas.
Yes.
Mr. Kotak, if I might just start off with, we are, October is ending in India, and there is a festival season down the line. But Europe is hit by second wave of COVID cases. In the US, we are in the midst of an election, and you being where you are as president of CII and also as a banker, it puts you, as I said, in a vantage position to give us a sense of where we are headed, what the economy is today, and what do we expect over the next 6 months.
Vaidi, first of all, I want to say that maybe there was a good reason why people called hindsight is 2020. Who knew that 2020 was the year when we would really be looking at as a turning point in our entire lives? And the good news is we are now in the last quarter of 2020, and we should soon be saying, hey, this is what happened in 2020 in the rest of posterity. And I actually wanted to first say that there are two parts to this. One is about lives and second is livelihoods. And the both are interconnected as well. And from a global point of view, it is quite amazing that, the east of the world seems to have handled the COVID situation much better than the West for whatever reason. And it's just a pure fact of data. And I think both Europe and US probably took it easy early, then got it a little later, maybe relaxed a bit, and seems to have got it again. And again, who knows whether it's linked to the weather, and colder weather makes it more prevalent or spreads the virus faster. From an Indian point of view, I do believe that the last 1 month in particular gives me hope and confidence that we seem to have got our net positivity rate now coming down pretty sharply, and overall active numbers lower. our death rates are lower. And I would just hope and wish that post the festive season, India maintains discipline across, as each of us as human beings, to make sure that the virus does not hit us back. The point about the virus, which we also got to keep in mind, is we have also learned that for a while we started with the lockdown. At that stage, it may have been necessary, and we were also in a whole new era. But we have now come to a reasonable clarity that lockdowns are not sustainable as we go forward. And we will have to find ways of living with this phenomenon, irrespective of our ability to close down the country. And getting that livelihood part is going to be important. And how do we ensure that simple things like social distancing, washing hands, masks, we just follow religiously across every part of our day-to-day being to have a situation where it does not hit us back. And if we can keep our rates under control post the festive season, I think that would be the best hope and a prayer we can do for India at this stage.
Mr. Kotak, I'm not hearing you say that the time has come now where we can just actually now just be aggressive, just, really now sort of, in a sense, loosen our purse strings and actually make aggressive bets. That time is still not come. We're still a little bit away from that.
So I'm dividing the situation into two parts. On the health and the science part, we have to be clear that final solution is either a vaccine or a cure. Yes. So the health and the science part, we are still away from that solution. Whether that happens in first quarter calendar 21, second quarter calendar 21, time will tell. But science is still catching up. The science is not there. On the economic side, I think we've got a better handle of the situation compared to April or May. On the economic side, things are looking better. And between April and May to October, most of the data is clearly better. Yep. And I think you can see that there's also some structural shifts which we are in the middle of. One is, I think, a very important part of life which is changing and which is very evident, including from your meeting on the Adda.
Yeah.
I call it as geography is history.
Yeah.
Okay, I can be sitting in any part of the world, any village of India, and I could be serving any other part of the world. So this dramatic and profound change which we are going through can be significantly positive for India if we play it well. So I'm very optimistic about that. And second, which I think is going to change, is this divide in India between rural and urban India, where all our lives, Anand, we have seen migration of people from rural India to urban India for growth and prosperity. I think that can change fundamentally. Connectivity is in place. As long as we can provide education and skills, a person in a small village can do a job and serve any part of India or any part of the world. So both these are very profound changes which will work to India's advantage if we get it strategically right.
And you're absolutely right. And I think these are absolutely very profound. And we can't even predict really how long-lasting these changes can actually have, even cultural impacts, economic impacts. But I just want to maybe try to push you to actually say, is this the time to bet at least in these areas? I mean, or are we saying that we have to still wait for that vaccine, we have to still wait for that cure before we can say, okay, now we have actually bottomed out, because we have seen the bottom and now there's only sort of headroom to grow?
I think there are many parts of the economy which are actually benefiting, but there are some parts of the economy, Anant, which are still facing challenges. Therefore, if you take the aviation sector, the tourism sector, the hospitality sector, and some general services sectors, they are still under the pressure of COVID. But if you take the manufacturing sector, which includes consumer goods, pharmaceuticals, e-commerce, IT, digital, telecom, all those sectors are actually doing better. And you're therefore seeing a two-speed world as we go forward. What we have to be clear about is the organized sector in general is in a better position than the unorganized sector.
Yes. And this divide actually with sort of one whole bunch of companies, industries maybe, that are just kind of getting left behind or trying to grapple with COVID versus another bunch of industries actually exploding after this crazy disruption. One common element that you see in all businessmen is actually just risk appetite. Do you see that risk appetite also is proportionately divided in each industry, or are we all still what we've been hearing for the last, I don't know, not even since COVID, even pre-COVID, what we've been hearing is just people are so risk averse in India now to take, businessmen are so risk averse. Is that changing?
Anand, this is as a deep and dramatic a change as probably the industrial revolution was. It really changed the way humanity worked. It did lead to a lot of displacement, but at the same time created new opportunities.
Yeah.
We have to think about it like that. And at the same time, we have to find a safety net for people who will be left out in this. There are people who will be left out, and we have to go out there and find appropriate safety nets for them, which includes training, reskilling, support, and financial support.
Yeah.
I think we as a society must do that. At the same time, we must be with the winds of change and adjust to the new flight path.
Right. And one of the things that, that's my last piece on this, but I think you can take over. One of the things that come out, I think in the changed world, and we see this in the tech world specifically, is just the concentration of power in a few industries with just so few players. If you see the tech world specifically, at one point in America, 1900s, even a 5% market share was considered anti-competitive. Now we're talking about 30-40% market share very easily. Is this something which is one of the disruptions that we'll have to? Is a new reality of just doing business?
I think that if there's one thing which inevitably happens when you have a turning point in history, is that normally the strong become stronger. This is at some level the classic Darwinian situation,
yes,
the survival of the fittest, which
yes,
is playing out in the real world. And it is here that society, governments, and people from business need to work together to find a supporting system for the overall society. And that is a very important part as we see this inevitably happen. But I also want to tell you, Anand, what is going to happen is that even so-called successes
yes,
better be on their toes. What seems like a very solid position today can be disrupted much faster. So it is not a smooth ride for many, many years. The speed of disruption is going to happen at a much faster rate. And you're seeing it in sector after sector.
Yeah.
Even if you look at the media sector globally,
yeah,
in this epidemic or pandemic, I believe some of the major media players, whether it is the New York Times or whether it's the Economist or whether it's the FT, they have actually benefited out of this, and they've actually consolidated their position because people want credible news. And if they get it digitally and electronically, they're ready to accept that rather than a lot of fake news which is going around. The
Yes.
credibility, brand, combined with superior execution on digital in the new world are going to be very important.
And we'll try to make you add Indian Express to that list when the next time you say that.
I would really look forward to it.
Vaidhi?
Yeah, Mr. Kotak, one of the things which you just spoke about, about this social security net, this is something which has we have seen that in this pandemic, right from movement of migrants to say urban poverty levels, we have seen the vulnerability of the I wouldn't even say the bottom of the pyramid, but the mid of the pyramid. But look at the stimulus or say government support that has come about. Developed countries, of course, given their finances, they can afford a $12 trillion kind of fiscal support. But in India, we haven't really seen a stimulus which kind of supports those aspects as much as one would as much as the situation warrants. Like in Bombay, we are running a series today which talks about, ordinary people coming on the streets and asking for support or help. do you think that the stimulus, and the finance minister did, in an interview to us and even otherwise, she has spoken about, more stimulus coming. Do you see wage subsidy, the informal sector, those sectors getting much more than what they have got so far?
See, Vaidi, there are three legs to this. And I will just go to macroeconomics and then specific issue which you have raised about supporting the bottom of the pyramid. I think first on the macro side, externally, India is not fragile like it was, say, in 2013 or in earlier periods when our balance of payment and current account position was weak. This time around, on an external account, India is strong financially. We have got $550 billion of reserves. We will this year have a current account surplus. Balance of payments, the world liquidity is so high that you're seeing a flood of money which is coming into India. And we must encourage this because that helps us even being stronger on the external account. Therefore, there is no threat to India's external financial balance sheet, which is a big plus. We are also helped by the fact that oil is low and gold imports have dropped, which are two major items for India's imports. So a strong external account is a very good position for us to be. However, we do have a challenge on the fiscal side because we came into this COVID situation with a high combined fiscal deficit between both the center and the states. Now, numbers may vary, but it seems that our consolidated fiscal deficit is probably in the range of around 12 to 13% between center and states, both put together. Therefore, this translates to higher level of borrowing as a percentage of GDP and government borrowing as a percentage of GDP globally. And for a country like India, people say that we have to start getting careful moment we get into the 80s, and we should certainly avoid the nervous 90s. Okay, so that is on the domestic fiscal situation. On the monetary policy situation, we have seen a lot of steps which have made liquidity significantly available, and it's available pretty widely to NBFCs and others. It is also available at much lower interest rates. Today, a home loan is available at below 7% per annum. I don't think we have heard it for a long period of time at those rates of interest. So combine this excess liquidity with some fiscal stimulus and a good external account, it's a good time for us to be seeing how do we percolate it down. One of the schemes of the which was announced by the government, which is known as the MSME scheme, with a corporate guarantee or ECLGS scheme, which the government announced, whereby banks could give money to MSMEs guaranteed by the government. About 1.5 lakh crores is already used by MSMEs, which has actually protected some of the MSMEs from going out of business. My view is, and we have recommended it from CII as well, is that government had given a guarantee of up to 3 lakh crores, of which 1.5 lakh crores around has been used for that. And from CII, we have recommended that the balance 1.5 lakh crores could be used for guarantees to be given for supporting the stressed sectors, whether it's aviation, hospitality, real estate, or tourism. How can we use the balance guarantee scheme, which was totally for 3 lakh crores, to give guarantees for support of credit to be given by banks to these weaker or stressed sectors? It's a recommendation which we strongly believe is appropriate for our time, and we must give a chance for the stressed sectors to have a hope to live through this. So when times get better, they have an ability to fight back and survive. And this kind of step will also help protecting jobs in many of the stressed companies in the stressed sectors.
Yeah, taking Anand's question forward, on this risk aversion bit, I don't want to get boring on risk aversion, but, even before COVID, we have generally seen, last 6-7 years, I'm not even talking about 5 years, almost 7 years, I think, banks have been very, very reluctant to lend. We don't really see MSMEs is one part. Large number of MSMEs still don't get credit, at rates which one would expect them to get. A AAA corporate can easily get, credit. Even Kotak Bank, I would imagine, is like, it has been very cautious in its lending. And in various reports that we do for Indian Express, we have seen that, say urban consumers in, say, places like Bombay, for instance, a pawnbroker, far down in Bombay, in Kandivali, has got people who have, pledged jewelries to the tune of 70 lakhs. So you can really see that, urban stress at lower levels has gone up really, has become very bad. And actually, all this points to one aspect, which is credit access to credit for people in the lower rung of the society who are in services, who are in various businesses. That hasn't really happened, right? This such credit aversion seems to be really appalling at this point of time.
Vaidi, you have a point. In general, rural and semi-urban India has done better than urban India. In general, I think the most vulnerable part of society today is an unsecured urban consumer. That is where a significant amount of pain has been felt, because urban India was not ready for coping up with a COVID kind of situation. Coming to the point on risk aversion, we are finding that the behavior is a two-way situation. First, we are finding even the salaried employees are keeping we are again looking at the situation in our bank. We are finding a lot of them keeping a lot more balances compared to earlier times from their salaries. Therefore, they are spending less. Now, if you take the cumulative effect of spending less, if they spend less, it is somebody else's income which is gone. Second, we are finding that in general, as companies and the organized sector and each of the companies, and I'm sure that is true for all of us, as we try and become more efficient in this COVID period, we cut marketing spends, we cut other spends. What is happening is reduction of somebody's cost in business is reduction of somebody else's revenue. So that is another reality which will happen, because that's human behavior. Therefore, even if you get more money, consumers are spending less than before. It is here we also got to keep in mind a sharp reduction in interest rates will help, because that reduces the burden of the consumer. But the fact of the matter is, compared to April, May, in October, we are finding more confidence. Now, I'll give you sectors which are really doing well, which were a question mark.
Yeah.
If I look at, say, for example, the construction equipment sector, which is road construction, mining construction. I was talking to JCB, a company which provides road construction equipment. They are showing a 35 to 40% growth YOY. That means road construction and mining is moving, and that creates jobs. Tractor industry is doing extremely well. Passenger cars has come back. People are wanting more self-use cars out of behavior. I believe the residential home sector is making a gradual comeback because of a variety of reasons. Number one, the rates are low. Home prices are lower. For a change, unlike the past, a ready home is available. You don't have to wait for under construction. You can get a home immediately with a discount which the developer is more ready to give now. And fourth is in places like Mumbai, stamp duty has been cut from 5% to 2%. Therefore, if we begin to see the activity cycle start moving and existing inventory, for example, in the real estate residential sector starts getting absorbed, that's when you will then have an opportunity for business and construction to begin. Finally, if there's one thing each of us must focus, what can we as society, business and government from a policy point of view, what can we do to increase the number of jobs and livelihoods in the economy?
Right.
So this idea that, I'm just to clarify again, this idea that banks are not giving loans, is it being overstated?
In my view, the problem, Anant, is that many borrowers or SMEs and others with whom we have lines, they are actually repaying the money more aggressively than before. Or if they have an overdraft account, they're using the limits less. The risk aversion is not a problem just from the lending point of view. The business business borrower also is utilizing limits less. So what we need is, as confidence is coming back, how do we get them to come out and say it's worth taking risks? And if you ask me, normally best time to invest and grow is at turning points. And I personally feel today that we are at one such turning point. I would have been a little more cautious in April, May, June, because we did not know which way this was going. Right. But I feel more confident today than I did 4 to 5 months ago.
Sure. And in this turning point, I want to come to the equity markets. And this is not in India, so all over the world, we keep seeing people say that equity markets are not in sync with the economy. And I think the RBI governor also said that recently in India. What's your view on this? Are we out of sync, and will it correct?
So first, I'm going back to Finance 101.
Yes.
The price of an asset is also linked to the holding cost of that asset. Okay. Therefore, if earlier if I was a saver and I was getting, say, 7% in a bank deposit, and I'm getting now 4.5%, my earnings ratio and my ability to take a higher risk goes up, because I'm looking at a much lower alternative yield versus a equity or a risk asset. And therefore, the valuations adjust to the expectation of underlying interest rates at which you discount your future cash flows. So there is a change in the fundamental discount rate at which you discount future cash flows. So that is point number one. Point number two is, very often we tend to look at the economy from a shorter term lens, and markets, though they behave in the short run, are looking at discounting factors over time. And what is therefore happening is markets are therefore valuing earnings of companies at a higher PE multiple than what they were earlier. And this PE ratio is reflecting in marketplace valuations. However, I do believe that equity markets are reflecting more the reality of the organized sector. And many of the stressed sectors are not reflected in terms of their presence in the equity markets. Therefore, you're seeing only one side of the economy getting a higher weightage in the markets, and the economy is larger. And the economy has pieces not reflected in market capitalizations of some of the listed companies, but they're outside that. And that part of the economy may actually be having more pain than what the markets part of the economy, which is reflected in valuations.
So if I can just take you out of India specifically just for a second, what we're seeing in the West, I mean, such expensive valuations, 70, 80 Ps of several companies. Maybe going back a little more to the tech world, really. Do you see these kind of valuations, this kind of euphoria around a few of these industries that you only mentioned? Is it sustainable?
So, Anand, one is clear. I mean, if in India, if you take as, say, the risk-free rates as, say, if I take our repo rate as 4%, which is what RBI's overnight rate is, if you look at the same rate in many parts of the world, it is zero.
Yes.
So obviously the PE ratios can afford to be higher for the same currency kind of discounting.
Yes.
So interest rates globally are much lower.
Yes.
And the amount of money which has been thrown in the economy is mind-boggling. In 2008, Ben Bernanke talked about helicopter full of money. This time around, it is massive air cargo, multiple jets full of money which have been offloaded into the economy. And it's that size of the money which is keeping interest rates short-term close to zero. And investors are therefore going after assets which are risk assets. So that is one of the reasons. Second is a belief that the world is changing.
Yeah.
And that change has to reflect in the view that some companies will do better than the others. Now, it is obviously possible that the market may be overrating some companies and undervaluing some others, but that's how markets are. They correct and adjust over time.
Yes.
But as of today, very low interest rates, high liquidity, and a fundamental belief that the world of the future is different is changing the way people are looking at equities.
So, and this world of the new economy businesses, for instance, you talk a lot. I keep hearing you talk about renewable space. The kind of premium that these new economy businesses get to the old economy businesses that still have fundamentally, in a sense, better P&Ls. Do you see this gap, even if it does correct over some time? I mean, does this gap concern you at all?
My advice to all companies and business people is that wherever you got good cash flow businesses, put it into businesses which will be more sustainable over a period of time. And one of the most important factors which I would advise savers and equity investors is that when you're looking at your investments, look at two important criteria beyond current earnings or very glamorous picture. And that is resilience and sustainability of the underlying companies. Therefore, how resilient are they? How sustainable are they? How well they are changing the business models to the new world? Therefore, resilience and sustainability are key for the future of business.
Yes.
Mr. Kotak, on NBFCs, this is, say, for instance, I see that, say, car finance is picking up. People are, borrowing for cars. But if I just look at, say, one rung below, two-wheelers, two-wheeler finance has sharply, dropped. And that's probably a space which NBFCs were, dominant. As a policy advisor or as representing the industry, what will you tell the government on to ensure credit access at that segment where NBFCs are, hardly growing today?
My personal view is why the two-wheelers will do well, because it's becoming a very favored mode of transport versus public transport. And many of us in banks are increasing our presence in lending to the two-wheeler sector. Therefore, the issue is, as long as the credit scores of the borrowers are reasonable, I think the good quality borrowers are getting money. It is only quality borrowers with lower scores who are finding it a challenge. And that is something which we need to watch out for. And what has happened is that also there was very large proliferation in the financial sector. Lots of players coming in. Some people were more aggressive on risk. Some people were more conservative. And when the tide turns, the famous Warren Buffett statement, those who are swimming naked are seen. So that is some of the challenges which we have faced in the financial sector, that if your risk management practices were not okay, if you were taking risks without proper assessment and underwriting quality, those people have got some of the challenges on the hand. But the broader financial sector is in reasonable shape and is in a position to serve the economy, especially for segments which have got reasonable credit quality. The issue is the question which you and Anand raised, is many borrowers, either because of the livelihood in their small business or in their jobs, may have a stress. And we need policy and business to work together to support these people in the stress speeds. Therefore, my recommendation to the government is we must go out and ensure that borrowers or people who have, say, for example, who had monthly income at 25,000 rupees or less, those are the segments which we really need to go out and give the stress supports.
Yeah.
Mr. Kotak, is the NPA crisis well behind us, or is it possible there are a few more skeletons out there that might come out?
No, I think broader financial sector seems to be okay, but there will be pockets who have not managed risk well and which will come out and play out over time. Therefore, broader financial sector, I think, is safe and stable, but there will be pockets within that which
Mr. Kotak,
will suddenly run the risk of eruption.
Mr. Kotak, this, moratoriums, they'll end and, banks will start demanding repayments of companies. These moratoriums actually then seem to be just like kicking the can down the road, and banks will kind of again have problems with recovery with industries. While economy picks up, we still see that several sectors are still not yet out of the woods. and there has not been enough support. Say, for instance, how do say companies sustain themselves during this period when demand has been, of course, low, and supply side also there has been issues. So do you see that 6 months down the line, banks will again be flooded with NPAs? Do you see that risk?
Vaidi, there are two conflicting emotions or behaviors. One is need for hope, and the second is need for discipline. In the COVID period, we certainly need to ensure that the businesses who are on the edge because they are impacted or disproportionately by COVID get a chance to live for a while and hope that the COVID pain goes behind them. So there is a need for giving that bridge which enables businesses who would otherwise have died to have that bridge, so that should things get better on the COVID front in the next 3 months, 6 months, 9 months, 1 year, we've given these businesses a chance to survive. And that is what I call as the emotion and the need for keeping hope alive. On the other hand, we as banks manage depositors' money. Therefore, we have got to take care of ensuring that moratoriums, as we give to the borrowers, we don't have players who say moratoriums for depositors. That's not what we want. So we need to ensure that there is a discipline also at the same time while we work on the hope side. Therefore, there are two balls we are juggling, hope and discipline at the same time. Too much of one can lead to indiscipline, but too much of discipline can wither away hope. And navigating that track and deftly is what banks and financial institutions are doing. And it is here I must compliment the RBI for the way it has handled the policy in the post-COVID era.
Yeah. If we can come to the banking space specifically, is such an important sector to actually get the economy back up. Specifically, how do you see all these public sector banks being consolidated? We say we're an underbanked country. Will the consolidation help with the spread of banking, or will it make it more slow?
My view is, Anant, we need 4 to 5 strong public sector banks, and we need a strong and a healthy private sector.
Yes.
And if you look at the history, there was a time when public sector banking was 90% plus of the Indian banking. It's now about 65%. And my personal view is, over time, if we get to a balance which is around the 50-50, that's not a bad place to be.
And do you see a lot of private sector consolidation happening, private sector banking consolidation?
See, consolidation is always an option, and I think it depends on the situation. And over time, I do believe that few players will be getting to be significant players. And if you look at the position worldwide, globally, there are 5, 6, 7, 8 banks in most countries who are the larger banks. And then you have a whole host of smaller banks. I think India will go on similar lines over time.
And we have to ask that, are you actively looking right now today at opportunities like this? Are you always hungry for it?
We went and raised capital in the month of May in the markets in the peak of the COVID period. We were delighted that investors gave us capital, and we did make a statement in our offer document that the purpose of raising capital is threefold. Number 1, to strengthen our balance sheet. Number 2, to go for organic growth. And number 3, to be open for inorganic growth. So that's exactly how we are thinking about our business, to keep on having a strong balance sheet, keep on growing organically, and always be on the lookout for appropriate inorganic growth.
Yeah. And Mr. Kotak, where do you find, if I can ask, where do you find the your competition in the future? Do you find it from NBFCs? Do you find it from public sector banks? Do you find it from foreign banks, or fintech? The big question mark around fintech. Which of these 4 areas do you see are
I'm clear the future of financial services is a merger with technology, and it's going to be a massive reorientation of minds of all of us. And Historically, we've always believed that we have got to think about business and technology has to be an enabler. I think the world is changing to a point where technology will drive business.
Right.
In banking, keeping this broad technology as the core of how the business will be driven, there are three important aspects which are crucial for the future. First is human quality of what I call as prudence. Banks should be prudent. They should not be too excessively risk-taking. Second is what I call as simplicity. That is, make life simple for the customer and build your business model and products in a simple manner which customers understand. And third, and the most important quality, is the quality of humility. Many times bankers believe they are the masters of the universe. It is arrogance. What matters for banking is three human qualities: prudence, simplicity, and humility. And if we can get that and combine it with a massive focus on customer and risk management, it is a winning model forever.
And if I would just ask you now, in terms of maybe a cost of your manpower, what percentage of the cost of manpower would you say would go in the technology, in the techies, the techies in your company?
If you ask me in the future, it will be an exponential part of our future. And the question is how much of the technology manpower we have in-house,
yes,
and how much we partner
yes,
with the outstanding technology companies. What we have got to be careful is very often banks think more about business and then about technology. In many parts of our future, we will need to first think about technology and then how it applies to our business. And therefore, an outside-in view is also important. Having techies internally is good, but having ability to get the best techies in the world and mindsets which are different is crucial.
Yes. I think we must come to the government piece, and then Vaidi, a couple more questions before we open to the audience, because we have a great audience and we must get them to ask questions. Maybe I'll just get on the government side. Scale of 1 to 10, how do you just rate how the government has responded to COVID?
This rating is always a very dicey game. All that I would say is, we are all, when we all looked at, and I'm looking at in the COVID era, I look at it as three worlds. I call it as BC, DC, and AC.
Yeah.
So BC is before COVID, DC is during COVID, which is where we are now, and AC is after COVID. I don't know when AC comes, but we must keep that in mind. And therefore, I do believe that in the DC world, the government has moved as things have developed. Therefore, first, it was important to get people aware of the fact and therefore get a lockdown. I think it was necessary at that point of time because we were walking completely in the dark. Therefore, at that stage, a lockdown would have been necessary, especially in the early stages. We have then shifted out. Therefore, if you look at holistically, I do believe the government has been proactive.
Yes.
If there's one area where I believe we can do better, and this is broadly at governments, not just the central government and state government, is a very important need for improved collaboration with reference to COVID and other aspects of the economy between center and state governments.
Yes.
Health is a state subject. But I do believe that India's economy is a subject which is both for the states and the center. And the states cannot take a view, if GDP is center's problem, my problem is only health. How do we get states across the country be a part of building an economy which is important for all Indians, not just the problem of the center? And this collaboration between center and states is, I think, the crucial part which we certainly can get better in the days ahead.
But, one of the things that we heard and we believed that, this disruption was so massive that it really would give a license for any government to do the kind of reform that they were always hesitant to do because it was politically, difficult to digest. Are you happy with the amount of reforms that have been announced? Agriculture, labor.
I think agriculture and labor are two big ones.
Yes.
I think what is in the pipeline, which has been announced, but we would love to see the execution, is the whole privatization.
Yes.
I understand all the challenges. We have challenges with Air India. We have challenges with BPCL. If we get progress on some of these areas where we see actually deals get done, that will be a very big confidence booster for the economy.
But it doesn't have to be as slow as it has been. I mean, Air India, let's leave aside, because that's a whole different, but I mean, things like LIC, things like, I mean, if we think about railways, these are, I mean, you see there's so much excess liquidity all over the world. Aren't these like just great, easy things to sort of privatize and get investment for?
Anand, as you know, I've had experience recently in the last couple of years also in ILNFS, and
yes,
the process of resolution in this country. And one of the biggest challenges in India is execution. And this is not just for the last 3, 4, 5 years. This is for a very long time. In India, we need to improve what I've called as ROTI, return on time invested. And we must focus, and I've seen this over my entire career. So for the last 30, 40 years, India must respect ROTI more, because time is of essence, and therefore execution is key. Many of us have very good ideas. The challenge is what we need today is not advisors, but people who can support on execution. And if India and Indians can get better at execution in general and start getting better roti, we would have made great progress.
Right.
Mr. Kotak, let me get back to you about corporate sector in India Inc. Say for instance, in the US, you have an Elon Musk and say a Jeff Bezos who kind of on critical issues which impact the society, which impact the economy, on policy aspects, they come out and speak very openly their mind to the government. They do not even kind of shy away from taking the government on in the courts. But in India, what does it in this vibrant democracy where dissent, discussions, debates are always a part of? Why is it that corporate India hasn't found the space to kind of openly speak up?
See, first of all, we are really delighted that we have truly independent media like the Indian Express. Okay, so you do speak your mind, and we respect the Indian Express for that. And my sense is that in India, it's not just about the message or the content of the message. It is about how it is positioned. And my experience is that the government is open to listening as long as the message is given in an appropriate manner, in the sense that it is not with an agenda and it is not for vested interests. Okay. Therefore, if you give a message about what you believe in a manner which is appropriate, that is, it is not poking anybody in any particular manner, and it is without an agenda, I think it is possible to give the messages. And I don't think that is something which is an issue. It's today's governments, earlier governments. Governments tend to be sensitive and often believe that very often the message has an agenda behind it. If the message is given appropriately and without vested interests, I don't see an issue.
Yeah, no, I say for instance, I just have say one or two instances. Say for instance, when a woman in Bangalore, which is the Silicon Valley, the IT capital of the country, when she says something like, we must all love India and Pakistan, and then faces the heavy hand of the police, or say Tanishq has to withdraw its advertisement because of reasons which we all know. Why is it that in Silicon Valley not a single say IT CEO speaks up, or in Bombay not a corporate sector, not a single corporate chief speaks up?
I think it's time you got the Tatas onto your show on Express Adda.
No, but I wanted to ask you one thing specifically on just the the image of the corporate of the businessman. I mean, you're somebody who's universally liked across the country in all different kind of places. You kind of that people who are familiar with you and your work. I don't know if you had the chance of watching Bad Boy Billionaires, you had a chance of watching, even that scam 1992, Harshal Mehta.
Yeah.
What is your view on the image of the capitalist, the businessman in India? I mean, how do you see that having evolved, in the course of your 34 years?
Anand, it's a commentary again on one side, phenomenal enterprise which Indians have, and it's something which makes me proud. On the other hand, there is a very strange part of many of Indian entrepreneurs who have demonstrated a outlook which is shortcuts. Okay, therefore, I suppose that is how India worked at one point of time, and that's what worked for business models earlier. I think the world has changed, and the change is upon us. And particularly in the digital and electronic age, there is nowhere to hide. Therefore, one is cultural, that in terms of spirit, and the second is the fact that you are in a world where it is open, transparent. Don't try something which will embarrass you later, and play it straight and make it happen. And I genuinely believe the time has come for Indian business to continue to have the animal spirits and entrepreneurship, but play it in a manner where the rules of cricket are followed. And you just watch T20.
Yeah.
Earlier, if there was an umpire, his LBW decision was final. Now you can have a review because the electronic world enables you to see this. Therefore, the transparency which is required for judgments and decisions of everybody is out there in the open. Therefore, there's nowhere to hide. And I would strongly recommend to all my business friends that don't lose your animal spirit. I think this is a great time at a turning point for Indians and Indian business to invest in the medium term. At the same time, the rules of engagement and rules of Indian business are different today than what they were 20 years ago.
And do you find that there are too many rules also coming at Indian businesses?
I mean, that's clearly something. I am a believer, as I gave you in my example,
Yes.
Simplicity.
Yes.
I would love fewer rules, but followed rules, rather than having so many rules that we trip up somewhere or the other.
Yes.
So isn't it that part of a developing economy that huge resources, natural resources, where the government plays a very key role in terms of the government's, companies require government, corporates also require government permissions for many things. Does that have to do with the freedom that the corporate sector, or when you say that several people have entrepreneurs have kind of grown in ways where they have made shortcuts and all?
I am a believer that it's about how you give the message. My father once gave me an example about importance of substance and form both at the same time. And he put it to me that, Uday, if you want to have your meals are cooked in a vessel. But why do you have it in a plate or a thali in a systematic manner? The food is the same, but you don't eat directly from the vessel. You put it into your plate, you have it in a proper, sensible manner, and then eat it. I think communication is as important, and how you communicate is as important in addition to the substance itself.
I think let's go to the audience. We've got a fabulous, line of questions and some familiar faces to all of us and to Mr. Kotak as well. Is Mr. Niranjan Hirandani, are you online? Can you turn your mic on and ask the question that you've posted on the Q&A, but I'd rather hear it from you.
Uday, fantastic views which you have given. I love the roti view that you had. What is your view on the infrastructure and real estate sector? And my second question to you, Uday, is if the vaccine which is coming, hopefully comes in December, can we get back to the 5% growth, and what will we need in order to get it back to 5% if the vaccine comes in December, which I hope it will?
Thank you, Niranjan. If there was a question on the real estate sector, the best guy is you. And here is my view on the real estate sector. I think I am more optimistic about residential real estate compared to commercial real estate. because I think there's a fundamental change in behavior which is happening. COVID has made most of us feel that home is a very important place, and which for the wider society itself. I hear about a number of people who are staying in a one-bedroom home saying, listen, I want to move to a two-bedroom. Or people who are in a two-bedroom home saying, I want to move into a three-bedroom. People who are therefore saying that home is becoming a far more important part of my ecosystem. Certainly help, and combined with lower stamp duty, including in the state of Maharashtra, it should help in making the home more affordable. Infrastructure, I think the government has taken note of the fact that one of the biggest small, medium, large businesses on time is an extremely important part for building the infrastructure businesses in our country.
Dr. Swati Piramal, if you're on.
Yeah, hi Uday.
Hi Swati.
This was a masterclass in communication. Well done. So my question to you is that, in COVID-19, it's been an unprecedented crisis, morally, and health crisis and economic crisis. It's just a crisis. But I think it's been a failure of management globally. Managing policy, managing inequity, managing really just being muddled up in thinking straight. And that's why so many mistakes, so many people have died globally. What is your view? What could they have done better as global leaders? What could they have done in a better way?
Swati, I think many parts of the world were in a state of denial. And that was a problem, particularly, say, United States. And I know I'm commenting very close to an election there, but the fact of the matter is you don't solve a problem if you're in a denial. And I just want to, Swati, share with you something which you must be aware of because, you are the expert in the sector. If you look at the healthcare spends of the developed world, the US spends 10% of its GDP on healthcare. Germany spends 14% of its GDP on healthcare. India spends 1.3% of its GDP in healthcare. But I'm coming to India in a moment, but take the developed world where they're spending so much on healthcare. Despite that, the outcomes are very disappointing. It tells you something that they could have got it much better, and they lowered their guard too early. They declared victory also too early. Europe had a problem in April and May and declared victory. On the other hand, I think on the Indian situation, my personal view is India needs to double its healthcare spend over the next 3 years. And the question inevitably comes, and as Vaidi was asking me, where will the money come from? I think one of the most important things which we as a country and the government and the policymakers need to sit down together and think is innovative ways by which we can raise resources for funding something which is crucial for us. And for India's future, when I think about where we need to strategically spend our money, healthcare is at the top of my list. Healthcare, defense, infrastructure, education, and sustainability. These are the 5 areas where India has to find the money and spend medium term for building a better India.
Great. Can I ask Mr. Ajit Gulabchand if he's online?
Yes, I am online. Uday, that was a wonderful disposition of your idea of what is happening in the world and India. I thought it was a bit too optimistic because when you ask people on the ground, lots of people, there is a lot more pain on the ground than has been predicted. And when you ask that things are doing very well, it goes contrary to their ability to come out of their pain and say yes. Because when you acknowledge the pain, you will find solutions for it. And then when you start finding solutions, you'll see many of those things happen. In this context, I want to ask you one question. There are lots of things were going wrong in India for a long time. Then we corrected ourselves and we started getting a great desire for doing things. Like somebody like Ratan Tata even mentioned that I wish I had 10 more years to live because I could then do many more things given the atmosphere that existed in the early part of the last decade. Now, when you are coming down to this, there's a certain sense of morosity in the way we look at things. There's a fear in doing things, in the sense that risk averse. So, in this context, in order to lift, and this has happened before COVID, COVID is another unfortunate thing that has hurt us even more. But COVID is not the reason I'm talking. I'm talking before that, we were sliding. What would you recommend if you were the finance minister or the chairman of the economic advisory committee or the prime minister? As I asked this question once to Larry Summers, who was in a similar position to the President Obama, what would be the three things you would recommend the prime minister to do? Because in India, the government has a huge responsibility because not only it doesn't have the policies that excite people, but they also come in the way of doing things. Like Baba Ramdev said, suvidha na kare to theek hai, magar asुविधा na kare. Now, what would you then recommend to your prime minister as a economic advisor, as a finance minister, that these are the two or three things you do, and it would create a different atmosphere in India. The joy of doing business and joy of investment will come back.
Yeah, Ajit, thank you for your question. Let me first say that India has a great ability to disappoint both the optimists and the pessimists. Therefore, having said that, if there's anything which humanity lives for in the future is hope. Therefore, I would strongly advise all of us not to give up hope just when things have become tough. So that is one broad general philosophy I believe in. Now, in terms of, if we think about India at this stage in terms of what is important for us today, and these are obviously changing times, and we've got to take the view of both short term and the medium term. In the short term, I do believe we must work towards ensuring that people who have been hurt because of COVID in terms of their livelihood, we have to find ways of getting resources to give them a chance to live and survive. I think that should be our number one priority. Number two, for businesses which have been affected by the stress of COVID, we must be able to create that bridge which gives them the ability to have a chance in the future. That would be my immediate response to these 2 points. And the third, for me, is medium term. We must always make a distinction between what is urgent and what is important. I think what is important is what I said. We must spend on healthcare, infrastructure, education, sustainability, and defense. I have, for resources reasons, if you look at our defense spend compared to some of our neighbors, we are spending much less. We have to find the money. But in the medium term, these 5 areas, we must find the money for the state, for the people, get the capital in this in a high liquidity, easy money world, and fund these 5 areas over the next 3 to 5 years relentlessly in our pursuit for becoming a much superior country. And if we put money in these 5 areas, while we take care of hope and aspiration in the short run, that's what I think we need to do at this point of time.
Since you mentioned defense, I did want to ask, and it's going to come up opening the questions, is that how closely are you looking at the situation in China? Is it something that concerns you at all?
You know, Anand, there's a very interesting dichotomy which we are living through. Okay? Politics and economics. politics of today, the global geopolitics of today, is making us go westward.
Yes.
The economics of the post-COVID world are demonstrating much faster growth in the East. So we are actually in the middle of a dichotomy. Politics takes us west, the geopolitics. Economics, trade, and opportunity is much more happening in the East. And it's not just China. It is China and the entire eastern region to the east of India, which is growing at a much faster rate. If you look at even COVID, we talked about COVID and Swati asked that question. Even COVID, East Asia and Southeast Asia and North Asia in general have handled COVID better than the West. So it's a very strange dichotomy. And one of the important issues for us is we must be able to marry geopolitics with economic realities. And that is the navigation which we as a country and policymakers will have to find the answers to.
But do you welcome all the protectionism that's happening, especially Kuwait, China, after the border tensions?
Anant, in the last few months, India's trade with China has gone up on both sides. Okay. And the numbers are actually speaking that India's trade with China has gone up in the last few months. And India's exports have gone up to China. One of the major reasons why Indian steel industry is doing better is because they've been able to export freely to China.
Right. Fascinating. Okay. I think we'll just go back to the audience. Kailash Kulkarni, CEO of L&T Investment Management. If you're live, could you please turn your mic on and ask your question? Okay, maybe we'll come back. We'll come back in a bit. Yes, go ahead.
Yeah. Good evening. It's as usual, very, very simple and easy to understand session by you. My question was that you mentioned a couple of very good reforms in terms of labor and the farm reforms as well as the MSME reforms. How critical would be the state's role in ensuring that these reforms get implemented well, or is it really that the center can play a very large role in ensuring the smooth passage and smooth way these get implemented? Because differing ideologies actually tend to clash, and there's a lot of noise around this. So could you throw some light on that?
Kailash, is a question which is very important today, the center-state relationship. I think that is at the forefront of India's destiny. And it's very important that states and the center handle this very thin veneer of this relationship well, because we must not allow that center state's balance and equilibrium get fractured for our future, because there is a great interdependence both ways. And I would therefore request all the states to show maturity beyond political objectives, and same obviously to the center, to really build a single India. The center-state relationship is at the core of India's future.
Can I call? I think we'll just go two questions at a time. I want to make sure I get most of these questions in. If I'll ask Mr. Ashok Khemka, Principal Secretary, Government of Haryana, and after that, Mr. Mudit Jain, Managing Director of DCW Limited. Mr. Khemka, if you can please go ahead.
Yes, can you hear me?
We can hear you.
Yes. Mr. Kotak, your talk was very lucid, simple, easy to comprehend. My question is, why do industry titans not join hands with the government and regulators to stop corporate scams so endemic now, and which manifests as banking NPAs or defaults in repayments of corporate deposits to the senior citizens and people, the savers who have relied faith on such corporates?
Now, Mr. Khemka, you are asking a very question, and I do understand the challenges which savers, investors, and depositors have faced across some of the challenges with some of the banks, some of the NBFCs, some of the housing finance companies, including some of the cooperative banks as well. So I understand the challenges which have been faced. My view is that there are really two aspects which drive behavior. One is rules and rules and the supervision of rules, and the second is a deep cultural change in the DNA of people of this country. And I think we need both, because one of the challenges on DNA is, for a long period of time, a word called jugaad was a standard language which we all heard in our country. Jugaad in the positive sense is welcome, but jugaad also meant let's fit this and fix this. I think the mindset is much more societal and cultural, and that change, I think, is happening as we talk, and we therefore have to be a part and instrument of that change. I don't think change happens as an island. Change happens when society believes we need the change, and we are in the middle of one of those phases which we are going through. But change comes with a lot of pain. It's not easy, and it's we need to ensure that we handle that pain along the way as well, and not get scared in the middle when the pain is high.
So, Mr. Kotak, I'll just take two questions at a time. If you have a pen and paper in front of you, maybe you can just to remember the questions. Sure. Mr. Mudit Jain?
Yes. Mr. Kotak, as someone who understands finance and economics, why doesn't the government put power in the people's hands? They can do that by sharply reducing the indirect taxes. Taxes on petrol is 250%, so that more money is in the hands of people, which will lead to greater velocity of circulation of money, leading to greater circulation, leading to greater consumption, and then stimulating the economy. Japan too also co-opted business by forming MITI after World War II, and then you saw spectacular results in Japan. Sadly, why is government not co-opting business in implementing economic plans?
Can I ask Mr. Rathi, MD of Indian Nivesh Fund, to go next? Mr. KK Rathi?
Hello.
Yes, we can hear you. Hello.
Yeah. Mr. Kotak, I think relating to question of what just was asked by Mudit, I think the changes in the implementation of GST and government's rather adamancy on not making major changes in the rates or bringing down the number of rates or reducing the impact of GST is becoming a big hurdle in turning around the economy. Don't you think government should look at GST afresh and try to make major changes so that it really become beneficial for the economy as it was intended originally? Thank you.
First question on Mudit's question of power in people's hand. One of the things, and this is again deeply psychological, I don't want to spend disproportionate time on that, on the psychology part, but India is a very paternalistic society, and therefore the expectation of average Indian is Sarkar ne kya kiya mere liye. Okay, it is a society which has for a long time had a bedrock of what I call as entitlement. Therefore, what you are suggesting is a very appropriate thing. How do we move from being a society of entitlement to a society of empowerment? And the change for that is, of course, the nature of how governments think, but how the nature of how people expect the governments to think. Okay, people will always say, if there is a problem, what has Sarkar done? If a particular bank's governance is bad and depositors are at risk, if you had talked to some of those depositors in normal times, they would say, oh, but I'm getting 2 percentage point higher deposit rate. Okay, but how do we get a society, whether it's depositors or investors, to understand that whatever decisions and judgments they take have a risk element to that, and the consequence of that risk is on them? And then if things go wrong, we should then not be asking or bailouts from government. So it is a two-way process. The society is paternalistic by nature and expects government to be out there to support. I am not in any way defending the need for better regulation and supervision. I'm not on that point, but I'm on a point that entitlement expects when things go wrong, what does Sarkar do? But if you are ready to say that we made a mistake in our judgment and we are bearing the consequences of that, then that could be a very important step to move towards a society of empowerment. And on the point of GST, I mean, I would love to say that, yeah, they must do everything on GST, but today they are not able to have enough fiscal resources. There is a challenge on debt to GDP. There's a challenge on funding states. You know that they have given guarantees to the states. So they've had to, now in that battle, finally the central government is going to borrow and give the states money for the next 2 or 3 years. Therefore, at a time like this, to expect the government to give up whatever revenue sources are there, it's not an easy thing at this juncture of time.
Can I ask Mr. Yoginder Alag, Vice Chairman, Sardar Patel Institute of Economic and Social Research? And after him, I'll ask Mr. Venkat Raman from ICFAI Business School. Please go ahead, Mr. Alag.
Suresh, talking of paternalism, Uday, your dad, Suresh, is an old colleague and friend of mine, and we lobbied for cotton reform and then textile reform. But I let that pass. My first question has to do with the whole question of the stimulus. I think we've had to do a lot of defense spending, and that has perhaps helped us. But a lot of the financial help that we are giving, as you said, is basically a rollover of loans. And in the short run, given the urgencies that you talked about, isn't it useful for us to spend some more money on some of the nice things that you talked about, rural-urban infrastructure and so on, rather than worrying too much in the short run on financial balancing? Because as you said, if people live, then there will be a day when we'll be able to do more reform. I think my second question has to do with agriculture. All the bills that we have, because it's the one sector that has been facing these problems well, the farm bills are in the right direction, but at the time at which we have lockdowns for very valid reasons, isn't it better to think of implementing them, let us say next year, and getting somebody like Ramesh Chand to do a kind of roadmap as to how we bring that out? Because basically they are about trade, and transport gets locked down in this period because of sudden needs, very legitimate needs. And since you are here, I have a last question. In the 9th plan, I had suggested that the Valhalla of Indian economic policy is capital account convertibility of the rupee. Now, the rupee is convertible for foreigners. We are sort of maintaining an impossible interest rate, so they keep us sending us money. But for Indians, it is still not convertible. Do you have a kind of medium-term strategy for building up a convertibility of the Indian rupee? If so, I'd be very grateful for an answer. Thank you.
Can I just ask Mr. Venkat Raman, Dean of the ICFAI Business School in Gurgaon, to ask a question?
Good evening, Mr. Kotak. My question is on both on IL&FS. In hindsight, if the S-Bank model of restructuring had been adopted for India's largest private sector infrastructure lender, IL&FS, both the company and the creditors would have been saved. What's your view on that? Number two, what was asset liability mismatch the main reason for the problems of IL&FS, or the unproven allegations against the senior management? What's your view on that? Thank you.
Okay. First of all, Mr. Alag, my father, as you know, is an 87-year-old young man. and has enormous amount of energy. And he does mention about you. So I want to mention that to you. You know, we sit down and have lunch every Sunday together. And he is a complete cotton man and an agriculture man. He's a great believer in agriculture being the backbone which can help India in the future. Coming to your specific point on stimulus, I think the issue we have to ask is, what is going to be a bigger problem for us? Is it going to be supply side or is it going to be demand side? I have been talking to, for example, some of the auto companies right now, and they are saying that they're getting enough demand for their cars, but the big bottleneck is supply. The supply chain bottlenecks and inability to be able to get through parts from, some of them are from international suppliers as well as domestic lockdowns, containment zones and others. So if we keep too much of a demand stimulus and did not have enough supply, I think we will have a problem. So we need to keep that physical issue in mind, that supply is a constraint as well. And the view is that if we spend more on the supply side, that is going to create some fundamental development, sustainable structure, rather than giving a stimulus on the demand side, which could be more from the point of view like a steroid. Therefore, even if you give a steroid, give it in small doses, but focus more of your fiscal issue on the supply side. And the same thing, I think, would apply for agriculture. On your question on capital account convertibility, I think India is in a very good position. And I think the answer to capital account convertibility, I think, are two important points. First is, do we believe the price of oil will be low for long? If we believe that, it is easier for us to plan for capital account convertibility, because India is disproportionately dependent on oil even now. And the second big one is, Indian savers over years have disproportionately exported our savings into gold. And if India has to get to capital account convertibility, we must have an ability to have a gold monetization or a liquid rolling or moving of gold within the country. India and Indians must be amongst the highest owners of gold in the world. And that is a capital account convertible item. How can we innovatively get a solution for gold and oil remaining low are crucial for India's future. On the point on IL&FS and the Yes Bank model, here is what I want to say. In the case of IL&FS, there were very many large shareholders, both from India and globally. The two largest shareholders from India were LIC and State Bank of India. Before the government put in the new board, the government had a choice. And I'm sure they would have talked with LIC and State Bank. But they took a view that they are not going to put in new risk capital or equity capital out of policyholders' money or depositors' money of State Bank of India. Therefore, the decision of the government, unlike in the case of Yes Bank, was not to put in more good capital behind IL&FS. And that is a fundamental difference, because finally Yes Bank has survived because huge amount of money has been put in as equity capital by various financial institutions, in particular the State Bank of India. Therefore, the choice was taken by the government, and I'm sure it must be in coordination with regulators and banks, not to put equity capital of either State Bank of India or LIC into IL&FS. And that is a very, very material difference. On the second point, I think the fact of the matter is that after all our efforts, we are giving an indication of recovery, which is somewhere between 50 and 60% of original loans given by creditors. So if it was only an asset liability mismatch, you would not have a hole between the total amount of loans due to creditors versus what we think is recoverable. Yes, there is a going concern argument which you may use, but today there is a gaping hole between recovery and creditors' money. And therefore, it was not only ALM. With that, I will hand it back to Anant.
We'll take a question now from Mr. Bharat Joshi, CEO of J-Curve Ventures.
Thank you. Mr. Kotak, you very rightly have pointed out that the government hasn't wasted this crisis, and a lot of reform has been pushed through. So specifically, would you support a more liberal ECB regime? Thank you.
Before you answer that, Mr. Kotak, I'll just ask Vidyanand Jha, a professor, IIM Calcutta, to ask this question. Mr. Vidyanand Jha.
It's good to talk to you again, Mr. Kotak. I had a more general question, which was, how do you see the relationship between business and government going in this phase? And, basically, if we say from a statist kind of, policy to a policy of more collaboration, what is the phase in which you think business and state relations are in India right now? Thank you.
Okay, on liberal ECB, I just wanted to say that today, for any borrower who wants to borrow in foreign currency, there is enough liquidity available in US dollars with banks from whom you can borrow US dollars as long as you have got genuine use and purpose for it. Therefore, I don't think there is any issue about foreign currency borrowings for most borrowers in the country. Keep in mind that when you're looking at lower interest rates on dollar or any other foreign currency, there is a forward premium as well. So when you look at your total cost, it is the cost of interest in dollars plus the forward premium cost. Do not just look at only interest rate cost, because otherwise you could take a foreign currency exposure for domestic and you could have a mismatch in the future. On the point about relationship between business and government, I can share this in my hat as President CII. The day before I took charge, we had a CII meeting with the Prime Minister Modi, and one of the most important points he made at that conference, which was in early June, is he looks at business and government working hand in hand. And there is a kind of message which has come from the Prime Minister to CII, and therefore I do believe that as long as business plays it straight, as long as there is no agenda beyond what is right for India and the Indian economy, I think there is an opportunity for business and government to work together and work closer together.
Can I ask last question? Then I'll ask the actual last question. But last question of the audience, I'll ask from Mr. Arvind Sahay, a director, IIM Ahmedabad.
Okay, hi. I hope you can hear me. So I teach at IIM Ahmedabad. Arvind Sahay. So Mr. Kotak, thanks for an excellent talk. One of the points that you made consistently throughout your observations was the issue of balance. And in fact, you mentioned that you have to balance between hope and discipline so far as maintaining the integrity of the financial system is concerned. So my question is about the financial system. The financial system in India and globally is kind of a tightrope walk. Some factors tend to stabilize the system and some factors tend to destabilize the system. And so therefore, I was just kind of looking for your views on what you think are the top three, which given the current state of the Indian financial system and perhaps globally as well, if we have the time for that, lead to stability in the Indian financial system, and which are the three factors which tend to destabilize, and how are they interacting with one another in the near term, to use your terminology, DC during COVID and after COVID AC?
Yeah. Okay. So you want me to answer this? Or
yeah, please go ahead, Mr.
Yeah. Okay. It's a very important question. What keeps the global financial system stable? First of all, with such low interest rates for long, let me tell you one thing. Globally, banking models come under huge stress at very low interest rates for long, because you have branch infrastructure, network infrastructure, people, costs of servicing, and if on the deposits you're not paying your customers, but you're not making any returns on the rate at which you're borrowing, taking deposits versus the branch network and all, the cost of lower interest rates for banking system globally is actually a big challenge. So that is point number one from the point of view of stability. A second important point is I think technology and change around technology. Every day when I go to sleep, I worry about whether I will have a bank next morning. And for two reasons. Number one, will there be a Google bank or an Alibaba bank which will take me out of business? Okay, with some technology change, which will make it uncompetitive for me as a banker. And the second one is safety of my customers' money. Will we wake up next morning and find that somebody has stolen away our customers' money? And these 2 points keep me sweating almost every single day. And therefore, we are constantly making change, because if there is one thing I want to say for keeping the financial system stable, is ensure that the practitioners like me are continuing to be paranoid. That is the key for our future.
Wonderful. Okay, before I ask, sorry, we get one more question and I'll ask the last. Shweta Rajpal Kohli, I think you were hiding with a different name, so we couldn't catch you. Could you please come and please ask a short question if possible?
Thanks very much, Anant. Great to hear you, Mr. Kotak. A very brief question on something that you mentioned around technology and the future of fintech in India. I lead public policy for Sequoia Capital India, and a large part of our portfolio is actually the fintech portfolio that has been doing remarkable work during the time of COVID, especially in digitizing the MSME space. Your thoughts around where fintech is headed and the regulatory changes that may be needed to further accelerate this trend?
No, I think financial technology, or fintech as you call it, is going to be one of the big instruments of change in the Indian financial sector. And what I just want to highlight is some of the nuances between how a fintech thinks and how a bank thinks. There are many pluses about how a fintech thinks versus a bank, which I'm aware of, which is technology first, customer convenience and solution above everything else, speed of execution. These are very big pluses for fintech. And on all these counts, banks in general are behind the curve. However, if there's 2 or 3 points which I just wanted to highlight is, along with the change in technology, we are finding risk management dramatically go up. The level of frauds in the system have grown exponentially. And it's a very delicate balance between customer convenience and security. And it's the younger customer in general has not seen what it means when he or she loses money. On the other hand, bankers tend to be excessively cautious about controls. Therefore, for me, the future of fintech is ideally a much deeper collaboration between banks and fintechs. Banks don't get it right easily, but fintechs and banks together are what I think is the future for developing a strong financial sector.
Great. Okay, so Mr. I'll ask the last question. As somebody who is in a different generation from yours, I just want to ask you, how do you see this, like my, or younger to me, my, the next generation of business leaders? To research for this interview, I spoke to 2 of your friends. One was Neeraj Bajaj, the other was Pati Piramal, and they both said something which we didn't really get to, but something that is so special to you. One is your humility. But other than that, they said, any important event, both you and your wife would be there for. That investment in the relationship. I feel that in my generation and the generation younger to me also, I feel that importance, that high context culture of India, which we were known for, I feel like that may be changing, maybe getting to a more transactional kind of way of doing business, kind of just way of being, really. A, do you agree? And B, what are the other changes that you think are welcome and not welcome in the next generation of business people?
Anant, you asked a question which is a matter of debate in our home every single day. And when I talk to both my boys, Jai and Dhaval, one of them is here and the other one is in the US.
Yes.
Their standard response to me is, Pops, you don't get it. And the world has changed. Our context about how we maintain our relationships is different. It's different from your time. Okay. Yeah. If you look at our generation, and I'm sure Swati and Neeraj relate to this, is we grew up at a time when there was no television.
Yes.
So advent of television was a big thing. Then you saw the advent of computers in the terms of emails. You saw mobile, and it was first voice only. We started with a world where we used to pay 60 or 70 rupees a minute for voice mobile to where we are now. Therefore, it's been a generation of ours which has seen a huge amount of change in our journey. And we, therefore, also need to keep in mind the new context. Yes, relationships are important, and I'm a deep believer in them. I am a believer that when you build relationships, try and build them not for matlab, but for strength of that over a long period of time. Because what you savor at the end of the day is relationships. But along with that, the context of change. Your generation maintains relationships differently. Okay? It is Facebook, it is Instagram. You find a different way of handling those relationships, and it is different, but that doesn't mean it is not contextual.
Right.
Therefore, I think the meeting ground is give some, take some. Okay? And that's what I tell Jai, my older son. Hey, there are some things we get it right. So at least try and follow a little bit of that. And there are many things you, Jai, and your generation gets it right. We've got to change. But keep in mind, change is more difficult for us as we get older. Change is easier for you as you are younger. Therefore, I think the answer is both. And it is a give and take between two generations or two separate perspectives. But all of us in our generation are getting much more technology savvy. For you, you've lived with it.
Yes.
No, that's the change.
No, so what advice would you give, somebody today? You're one of the few people actually who, became so influential and made it so big really in your field and, without leaving India. Most people, actually, Dr. Bramal actually highlighted this point that, there are few of you who actually didn't leave India and sort of made it happen in India. Today, what would you recommend to somebody who, gets an MBA at a fancy, American university? Do you recommend that person come back to India to be an entrepreneur or to sort of be an employee, or do you think would you say you should focus on the salary, focus on the opportunities that the West give you? How do you what's the advice you would give somebody who's in that predicament right now?
I'll share with you my own life. When I was in college,
yes,
we were 4 or 5 friends. 2 of them went to the US. And one of them became a very successful lawyer. And the other one became a very, very leading person in a large financial institution. Both of them are success stories in the US.
Yes.
And when they were going, I used to ask them, why are you going? And their view was, for their context, their levels of opportunity they saw in India versus the ease of the opportunity in the US was much better. Therefore, the starting point in the US was far superior for them than the starting point of starting here, with probability of success being lower.
Yes.
So as a pure risk-adjusted matrix, they took a call that this is a safer bet. And once you get into that system, you just get more and more enthralled with it.
Yes.
And the way of life, the way it is there, that you find it difficult to come back. And many a times I've had discussions with them. Why don't you come back? He says, no, we're settled. Now we've got our families, everything else. And they remained there. For some of us, I think it was the classic Robert Frost, road less traveled. And it was not fashionable to be in India in the 70s and early 80s when I was growing up. This is between 75 and 82. It was not fashionable to really, if you were really a smart professional, you would want to be overseas.
Yes.
And of course, I was a product of a joint family. I was born in a family with 60 people, 1 kitchen, and great family culture values. And I must say that advice of my father, and more so my grandfather, was, son, opportunity is there and the beckoning. Even if it is tougher, go with your passion and purpose. Don't chase short-term, quick returns. Think about risks. And ultimately, it was that entrepreneurial spirit, which I would strongly encourage the younger generation. The road in India is a tougher road, less traveled. The road overseas very often is the easier road.
Yes.
But like what George Bernard Shaw said, that a reasonable man adapts himself to the world. The unreasonable man expects the world to change for him. Success depends on the unreasonable man. And my advice to the younger generation is take a path and a road less traveled if you're bold enough and if you have the risk appetite to do it. Probability of success is low. But if you do succeed, the upside is high. That's my view on this.
Thank you so much for your time, Mr. Kotak. It's been a wonderful conversation, and we've had a super audience. And there's so many questions. We had over 150 questions that came in before the show even started. So we've taken most of them. I mean, we've taken some of them. Couldn't take most of them, but I'm sure we got most of the answers through anyway. Thank you so much.
Thank you, Anand. Thank you, Vaidi. And thank you all my friends and guests who have come on this show. Adda is great. Keep going, Adda. Thank you.
Thank you.